Good morning. Welcome back to Finance with Uchit. This is the May 2026 portfolio review. Same format, same structure, same standard. Every month, first week without exception. Here's where my books ended in May. So let's start with the total portfolio. Why to year 20 year to date gain is around 9%, while the benchmark, which is the Nifty 500, Nifty 500 year to date return is only minus 3.95%. So our book ended in a positive while this is in negative. So this means it's a great signal for me and for my book. Now my monthly gain is 2.96%, so approximately 3%, and my benchmark return is 0.5%. This is also a good sign. And the total stocks I hold in this portfolio is 28 stocks in total. Now let's go to the swing trading book. So my Y year to date gain is minus 6%, and the monthly gain is 1.33%. Or but this is but this but this book only holds 9.42% of my portfolio, with only having three positions in it. Now, I would like to increase this to 40%, and this low year to date gain and the low monthly gain is primarily because of having only three positions, and two of them gave really bad returns while the others recovered. So that's the primary cause of having a really bad return. And if I had more stocks and more diversification and a better and a more and I had more percentage of the total portfolio, then this year to date gain would be maybe even positive. So, and I would like to note one thing, that I bought one stock last month, so I'm using its buy price rather than its year to date gain or the monthly gain to get a better estimate of of the total gain and or loss. Now let's move on to turnarounds. So my year-to-date gain for turnarounds is 10.56%, which is honestly amazing. As you can see, Nifty 500 is the is in negative, and even if you look at Nifty total market, Nifty total market index, that would probably be negative too. Mm, yep, that's also a negative. So having a that's also in 3% negative. So having a 10% gain is honestly a amazing thing for me. And we have approximately 3.13% gain for the month, and the total portfolio size is 90, and this is around 90% of my total portfolio, and I have 25 positions in this book. Those are the numbers. Now let me walk you through what drove them, what the thesis developments were behind them, and what I'm watching going into June. Okay, the turnaround book currently holds 25 active positions, and let's just go over some of them. So some of them will be high conviction bets, and some of them I'm gonna show you some that I am that my belief is shattering in. So the first one, of course, is Yes Bank. Mm, Yes Bank is, of course, here, and I think Yes Bank is gonna move really well because of its SMBC acquisition, good quarterly results, everything, new CEO. So the main point is, for me, the thesis is still intact, and I think it's gonna be even better. The ROE trajectory and the asset quality is improving too. And then I have another high conviction bet, which is Indigo, and you can include Rosari in this as well. Indigo Paints. So Indigo Paints, I bought it around here in the lows. Of course, I again, I don't sell it cause it's in a loss. I only sell positions when the business changes, or when I think the the reasons why I bought them are going away. So here I'm nearly in break even. I'm in a slight loss though, but again, still I think Indigo is gonna go up. I think Indigo's gonna go up. Everything's gonna happen, and of course the growth is slowing down, but that's just because the paint sector isn't doing well. Like Berger Paint, everyone. Like even if you no, I should go to screener. Like I'll just show you every paint sector's. I'll just show you every paint sector's results, and they're not good, to be honest. Look, they mi- they're down. The sales are down. Everything's down. And even here, this happened. Of course, cause of cause of an exceptional item, but still the sales are down and the net profits are down. And not even this, like look at Berger Paints. Even Berger Paints net profit is almost same. Look here. What about Kansai Nerlac? Kansai Nerlac's net profits nearly halved. That's mostly cause of okay. That's mostly cause of this. So it should be nearly the same. So paint sector is not doing well right now. So right now it's in a down cycle. So that's why I bought it. Cause for me, I don't buy when stock. Look here. This is an exceptional item. So if we remove this, then this will be around 100 crores. So that's a really bad signal. Yeah, so paint. So for me, I don't buy when a sector goes up. I buy when a sector is down and it's gonna go up later. And then you can include Rosari too. One stock, I think my trust is breaking in. I my is this Muthu's cap. Muthu's cap has been consistently missing targets. It is of course below book value, but it's still missing targets, and it doesn't look so good to hold. Again, I'm gonna wait for a couple quarters and see if it changes or something. I'm gonna see if it's gonna get better or not, and then if I believe that things are getting worse, I'm gonna exit this position. And then overall, the turnaround book in May was A really, really awesome month for me because, again, apart from a couple of these, apart from a couple of stocks, most stocks went moved really really well, and of course, uh, we can see the market is kind of recovering. So my stocks will probably move up even more if something doesn't happen with the war or something else. I'm the most confident in heading into June. The most confident I'm heading into June is in probably Indigo Paints and Hevels. Watch, and I'm watching JP Power the most carefully because of the recent news of accusation uh, by Adani Power. I want to address. I want so the swing trade book had no closed positions in May. I want to address that directly because a month with no closed position, closed swing trades is not a month where nothing happened. It is a month where markets did not present setups that met my entry conditions. Not not trading when conditions aren't right is as important as discipline of knowing when to take a trade or when to, yeah. As in for swing my swing trading book, I can't really say anything right now. Although the market conditions look very choppy, this is usually this is the right time to buy because cause you get cause big money is only made when the markets are uncertain. Like, you can't buy a stock at its highs and expect it to make you you can't expect it to make you 10x or 20x returns with that. Again, swing trading is not meant for 20x or 10x return, but I'm just saying that. And again, I only hold three positions right now in in the swing trading book. So again, I would like to increase that as time goes on, and I'm planning to increase that because I don't want I don't want that kind of volatility in my portfolio. So this will just keep my returns the same while reducing volatility. I will cover my close swing trade in details when there is some though. So don't worry. Okay, so one macro thing I'm looking at in May and basically this whole year, one macro thing I'm looking at is unemployment. Specifically US unemployment. Unemployment, economy, and let me see if it's there. Mm, unemployment level. I don't think this is it. Nope. Okay, I'll just go here. This is it. Yeah, this civilian unemployment rate. So this is really important because, as you can see, whenever this rate goes down and then crosses up like this, a market crash follows. Like you can see in 1957 there was a market crash, 1970 there was one, 2001 there was one, 7 there was one, in 2020 there was one also. And then as you can see, it just crossed above that and now it's down here. So I'm watching, so this year I'm watching this rate. If it crosses above, if it crosses above this level, if it crosses above 0.45 and stays there for a month or two, then I'll be cautious. Well, if it crosses above 0.45, there will be likely there will be a news or some sort of that will make this clear. But yeah, I will be a little cautious if that happens because history shows that there is a crash and history often rhymes itself. So yeah, and I'm I'm doing deep research into a specific sector. It's like basically the AMC sector, and the reason it's on my radar is because honestly, AMC the asset management sector has the best, the best growth in India right now because approximately only 4 to 5% of the population here has demat accounts if I'm not wrong, and in US it's 60%, and most of the US citizens um invest in mutual funds or ETFs as they call them. So here, if that's 4% and in US it's 60%, that's a really big opportunity for asset managers to capitalize on. Even in the even in the wealth management industry, that's a big opportunity too. So that's why I'm diving deeper into that industry. And also, the current market structure for any short-term trades is a little choppy, but again, uncertainty often rewards you really well. Before I close, I want to give you an honest reflection. One thing that went well in May was me accumulating some quantities in my turnaround stocks and me buying a new swing trading stock. This matters because it it reflects that if you time the market right, the market will reward you really well. And again, like I said in my previous video, if your timing is bad with turnarounds, you're gonna suffer because turnarounds are a little more volatile than the market. So if you have bad timing, then you might as well have a bad thesis because timing matters in turnarounds. So that's why I always look at technicals when I'm dealing with turnarounds. Overall, the overall philosophy is two books, two time horizons, one coherent framework. The turnaround book compounds over years as businesses recover from fixable problems. The mark the market is mispricing. The swing trading book generates return in a shorter cycle that keeps me actively engaged with markets daily, and it reduces volatility in my portfolio. One thing I will never disclose in these updates is my portfolio size and the position sizes. Not because I'm hiding something big, but because the analytical framework and the thesis progression are what's relevant here, not the scale I'm currently operating at. The quality of the process is independent of the capital behind it. The judge the process, the capital will follow. This is episode 1 of a monthly series published in the first week of every month without exception. The new The next update will be in the first week of July, covering June's performance. Any close swing trades and thesis developments across all positions. If you if you are new to this channel, the Yes Bank deep dive and the turnaround versus value trap framework are the two videos that give you the full analytical context behind everything I cover in these monthly updates. Both are linked below. I'll see you in July. Please subscribe and like to this channel, and please subscribe and like this video. Have a good day.